Hello, this is Trading with Confidence, and I'm John Breland. So I want to talk a little bit about the anatomy of a trend, and I want to point out something that I think not many people really see, and I haven't heard anybody talk about it before. And I'm also going to talk about the Wall Street cheat sheet. It's a very interesting graphic. So let's get started. So I want to show you guys something very interesting about the market. And it has to do with the fact that the market moves in Elliott waves. And the most simple way to talk about an Elliott wave is that it's like a Z, whether it's going up or down. So here we have, let's just take it from the very beginning. So here we have a kind of a Z pattern. We've got this move up, pull back, and then move up. Well, the theory I'm going to pose to you right now is that the secondary wave up, or you could call it the third wave. This is wave one, this is wave two, this is wave three. So let me call this the secondary wave because it's really the secondary up or the secondary down. And you'll see that the theory I have, or that seems to be present in the market, is that the second wave always completely retraces. Or if it doesn't completely retraces, it mostly retraces. And this has something to do with the idea that these people are along for the ride that somebody else initiated. And in a sense, it's like they don't deserve the respect because they didn't initiate it themselves. So this is one of the reasons why when you get these second waves, you need to take your profit quickly because they're likely going to be taken out. So let me show us some examples of what I'm talking about. So the theory is this second wave will likely be completely taken out. And as you can see, as time went on, it got completely taken out. In other words, it got retraced completely. That's what I mean by taken out. So let's look at some other examples. So we have a wave down here. This would be the first wave. This would be the second wave. That second wave eventually got taken out right here. Then this third down wave also got taken out in a very minor way. So let's look at this wave right here. It goes up and up. Well, there's that second wave. You could maybe call this a third wave. If that second wave, if this was one wave, the second wave came and was completely taken out. See that? This wave comes up. This wave can be considered a second wave from here. It gets completely taken out and even more. So look at this one. This one dropped. There was a Z that came up a little bit and dropped again. That little section right there got completely taken out. Let's take this one right here. This would be up and then like a Z, then up. It got completely taken out again. Okay, I mean it's the secondary waves. Here's a secondary wave can taken out. Here's a two wave down here. Eventually that wave got taken out. It's like the market doesn't want to allow the people that go along for the ride to profit in the long run. It's kind of that way. So let's take a look at this part of the market right here. So we have motion, the start of this move, and then the start of this big move here. Well, guess what? The market has not completely taken this out, but the market is now heading down, and according to that principle, the target would be somewhere down here by like around $19. Well, we'll see if that really happens, but let's look at other places. Let's look at this big obvious one right here. Imagine this is 1, 2, 3. This entire wave has now been taken out. The third wave. You consider this to be one wave here. You can just keep finding these. 1, 2, 3 taken out. 1, 2, 3. This whole wave eventually taken out. 1, 2, 3. This whole wave here taken out. So now as we get to the right side of the market, these waves have not yet been taken out. So what we're talking about right now is a range of between here and about there, which happens to be right in the middle. So I'm going to be trading this one because I know this third wave is going to be taken out right here. This is likely for sure to go up to at least this level or this level, because this third wave has got to be taken out. I think it's likely to go back up to around 97 to 100 or so. So we'll see in the future. This is being talked about on 1/26/22. So we'll see what comes of this market. And if you're watching this video at a much later date, maybe you've seen the actual motion of the market. But if that theory holds true, we're likely going to see these areas up here, maybe that area, and also this area down here. Very wide, very wide range. So, you know, there are a lot of believers in the marketplace. You hear people talking about, you know, stocks or cryptos going to the moon. They never really talk about where they terminate or what happens next afterwards, after they moon. And so I'd like to talk a little bit about this Wall Street cheat sheet here. You know, this talks about the emotional states that the public experiences as the markets move. You know, in the beginning, there is disbelief when the market is very low down here. You have to think of this as, you know, you don't see all this in front. You only see this part of the market. In the beginning, when the market is really low, there's disbelief that it will go anywhere. I mean, it hasn't proven itself. And then hope starts to enter when the market starts to rally. As it keeps rallying, you start to see optimism. They believe in the rally. That belief is actually up here, and they think, okay, this rally is real, that we have to get fully invested. As they make money, they start to experience thrill, and they start getting into margin trades, and they're telling everybody they got to buy the market. As the market continues to go up, they're euphoric. They think they're geniuses. They're telling everybody they're all going to be rich. And I've been there. I was telling my family back in December 2007 that I was going to be rich. I was caught in all this too. And you know, this is exactly the emotions, and you can see it when you watch like other YouTube videos. You know, when they're talking about the markets, you see all this happening. And if without this cheat sheet, you know, you can't, you think that it's going to go on forever. It's going to moon forever, right? And I've seen so many people get caught up with this. It's almost impossible to sell when everybody's euphoric. But when everybody's euphoric, that's like the indication that you need to sell. Get out of your trades. Even if it goes a lot higher, you know, you still should, you know, if you're euphoric, you should be getting out of your trades. So the market then crashes. You know, it's just a big surprise, but still people are in belief that the market's going to go up. And it goes up a little bit, and they call it complacency. And they just think they have to kind of, you know, they've lost some money, but they're expecting the next rally. The next rally is coming any minute now. Then the market makes a new low. People start to get anxious, and they start getting margin calls because they went into margin back here. and they're saying, wow, this dip is taking a lot longer than they expected. As it goes down even farther, and people get into denial. They think, well, the market is or this particular coin is really a great coin, and it's got to go up. And I heard that today when people were talking about Bitcoin. This is 1/26/2022. The market's been crashing for the last few months, and people are in denial right now with Bitcoin. They're talking about how it's just going to be it's going to do it's the future is really, really bright. So they're in denial about it, and as it falls even farther, people start to panic sell, and they're just screaming that they got to get out of it, even though, like most people, a lot of people bought up in this area. They're all panicking and losing money. And then capitulation, a complete realization that it's no longer not going to work. They're 100% out of the market, and they can't afford to lose anymore because they've already lost a lot. And then anger sets in, and they start blaming the government, and they want to know who shorted the market. They're starting to look around for how to short. And the market keeps going down a lot slower, but it keeps going down. Then depression hits in. My retirement money is lost. How can we pay for all this new stuff? I'm an idiot. And then as the market moves up again, we're back into disbelief. Back here into disbelief. This is a sucker's rally. So the important thing to understand is that when everybody is depressed and feeling like all hope is lost, that is the peak of financial opportunity. Whereas when everybody's euphoric, everybody's saying they're going to get rich, that is the peak of financial risk. So keep this in mind. And I want to show you something. If you don't think this applies to Bitcoin, let me pull up Bitcoin. Does that look like that? There's the Wall Street cheat sheet. There's Bitcoin in 2017, 18. This is how the markets work. Don't think that the market's necessarily going to go up forever. There are two sides to the market. And the main reason for this is that as people, I don't care what instrument or what they're trading, except for maybe these companies like Amazon or Microsoft, which are really in it for the long term. And I know Bitcoin is in it for the long term, but they're not really, it's not really creating value in the sense that the companies are trading value. So what are people doing? They're trying to make money off of other people. If they see the market going down, they don't care if it's Bitcoin, they don't care what it is. They're losing money, they're going to get out. This is just that trumps everything. It trumps everything. It trumps Bitcoin's idea of limited supply, can only go up forever. It trumps all the tech behind it. Trumps all the marketing and all the positive, all the things people say about it, all the wonderful things people say about it. If you're losing money, you're going to get out, and that's the end of it. So don't fool yourself into thinking that any market's going to go to the moon, forever. It's not going to happen. So this video is not meant to discourage you in any way. It's just a reality check. The market is going to move up and down, and in the long run, sure, Bitcoin could go very far. It could go to 100,000. It could go to 200,000. We don't know for sure. But meanwhile, you can make trades both in the positive and negative direction. and make money while it's moving. And that's the whole point of this video series. I'll see you on the next video.